Hello, chart watchers, and welcome to this Thursday, April 25th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. All right, we saw some selling earlier today, but the market is trying to bounce back. Currently, we have the Dow Jones Industrial Average down 111 points, the S&P 500 now up 5, the NASDAQ up 29, and the Russell 2000 down 12, lagging on a relative basis today after showing some relative strength earlier this week. 10-year Treasury yield relatively flat, sitting at 2.53%. Volatility index up earlier on the weakness in the Dow and S&P at the start of the day, but you can see the VIX has reversed and is now back down near the low of the day. Communication services having a very strong day as a result of internet stocks and Facebook. Industrials on the other end struggling today as a result of delivery services and UPS. And you can see all of those down here below. Facebook coming out with a really strong report, beating on their top and bottom lines, gapping up above some key resistance. We'll talk about that in just a minute. But clearly that Facebook report lifting internet stocks, which had already been outperforming the S&P 500 and now really surging versus the S&P. Delivery services, though, heading in the opposite direction, breaking down below some key moving averages in UPS. We've talked about this group that's been struggling for a while, and seems like we'll have to wait to see whether or not we hold on to some recent support on UPS, but clearly this is a group that is lagging today. Erin, it's Thursday. We're getting close to the end of the week, and actually not too far from the end of the month. Kind of hard to believe, but how are you today?
I am doing very well. Yeah, next week we end the month just in time to have my dad come in on the 1st to go over all those monthly charts. So that'll be good. Yeah, I'm really I feel like I was a little bit humbled yesterday because on Tuesday I had written a very bullish article on the S&P. And shortly after, my dad had sent me an email. And he's like, I don't know, did you check the volume? It was kind of low. And so I was like, he's right. And then sure enough, yesterday we got that pullback, and so I had to eat a little bit of crow.
Well, I kind of agree with your forecast. I didn't see your article, but I would have to say I am very bullish going forward. And as I said, for me, volume on an individual stock, I think is really important on the overall market. We don't seem to get that kind of panic buying in the market to the upside that we see when we get sell-offs and the market gets really fearful. So, I've had a lot of folks look at the market in the past and say, well, the volume isn't as good on the way back up as it was on the way down. But I think if you go back in history and look, I think that's the pattern. I think the market always tends to sell off with more volume than we get on the way back up. So
yeah,
maybe if we look at it on a moving average basis as opposed to just a daily basis, maybe there's some substance to it, because you do need to have you have to have accumulation, obviously.
Mm-hmm.
But, I don't know. The volume on the indices, I hardly ever look at, to be honest.
Well, interesting. Yeah, I think overall we're going to end up going back to those all-time highs. But apparently, and it's true usually that, all-time highs, that's some pretty strong overhead resistance. I mean, we kind of made it above that, and now I think it's, the hangover a little bit.
And we've seen a couple of groups. We've seen technology. We've seen consumer discretionary breakout. Industrials, as I mentioned at the top of the show, the worst performing group, but they're trying to get through that overhead resistance. 79 is an all-time high for the XLI. We tested it yesterday, so it kind of makes sense that there's a little bit of profit taking there.
Indeed. All right. Well,
I do just want to mention, I also have to eat a little humble pie because my Washington Caps lost last night. Game 7 at home, twice with 2 goal leads. Okay, rant over.
Yeah, I didn't mention it. I actually didn't get a chance to watch it. I had a really nice dinner with a friend, but and my back was to the screen so that I would pay attention to her. So I didn't see it, but my husband told me all about it. He said it was almost as good as the Sharks Knights Game 7. So
yeah, I don't agree with him. I didn't like it.
It was well fought, is my understanding.
Yeah, I mean, obviously, I think the Caps just lost their legs. I don't know what was going on. The third period and then overtime, just not very strong. I mean, we were outshot 8-0 to open overtime. by
Oh,
Carolina, and I think they deserve to win the game. Honestly, I was waiting for them to put a puck in the net the entire first overtime, and pretty much the same thing in the second overtime. But anyhow, let's get into stocks. I know everybody.
yeah, we probably
About
should.
to jump
There's
into
our upcoming schedule. Greg is going to be in for me on Monday. I am not going to be here. I'm sure it'll be fun. I know everybody loves it when the two of you get together, Tom. I will come back though on April 30th, and I will be doing a workshop. I'm not really sure what I want to do it on yet, so I'm taking suggestions in the chat room and, of course, in our survey, which you can find the link underneath the viewer. My dad will be in, like I said, on May 1st to look at some of the monthly charts, so it should be a good week coming up. Today, we have got earnings, point counterpoint. So Tom and I are going to discuss some of those stocks and give you our what we're thinking, both of us. So I think that'll be an interesting segment. 10 and 10, our first symbol is going to be GBTC, Grayscale Bitcoin Trust. And then finally, we'll finish off the program with agree or disagree. One of those statements are in the poll. So go ahead and take that because we'll want to discuss it at the end of the show. All right, let's get it started. Technical news and headlines. What's going on out there?
All right, well, let's jump into the economic reports. We did get March durable goods out this morning. You can see a very strong number, but keep in mind durable goods is incredibly volatile. So I think it's probably best to maybe look at this over a 3 or 4 month period and kind of average it out. Some months we see big beats, some months big misses. When we strip out the transports, which tend to be a lot more volatile, you can see March durable goods came in with a rise of 0.4%. Versus the expected 0.2%. Then, of course, every Thursday morning we get initial jobless claims. Remember last week, I think the number was 192,000. This week, 230,000. So much higher than expected. But as we take a look at the 10-year Treasury yield, I don't think the market really cared. I think that it's kind of shrugging its shoulders. And as I look at this 10-year Treasury yield, I see the intermediate term downtrend and I see the short-term uptrend. I think in order to change the character of this 3, 4 month, 5 month downtrend, we need to get back up and take out that recent high to continue this short term higher high and higher low series and pattern. To the downside, yes, we're back down below the 20-day, but we're just kind of hovering here beneath it. I think if we go back down below that low around 247, that would not bode well for the yield. So in the meantime, I think short term, we're just hovering here between about 246, 247 to the downside and maybe closer to 260 to the upside. Let's see which one goes first. But if the 10-year Treasury yield does move up, it is telling us money's coming out of Treasuries, and that money typically finds its way into equities. The other isn't always the case when the 10-year Treasury yield is going down. Doesn't necessarily mean money's coming out of the stock market. It could just be new money that's coming into the 10-year Treasury yield. Keep in mind that since 1980, the 10-year Treasury yield's been declining. We've been in that long, almost 40-year downtrend. The stock market's been going up. So it's not always that positive correlation, especially over the long term. It's more about the short term and is money rotating from one asset class to another. Okay, earnings reports. And I'm not going to go through and read all these. They are a ton of reports coming out now. You can see first, these were reports that came out last night. Among the big ones, of course, Microsoft and Facebook, both having strong reactions to strong reports. And then this morning we had a number of reports out as well. A big miss there was 3M Company. 3M getting hit really hard to the downside. As I mentioned, top of the show, United Parcel Service, UPS, missed, also getting hit to the downside. And I just want to point out after the bell today, Amazon, Intel, Starbucks, T-Mobile, Illumina, and Ford. So got a pretty good list of stocks that are going to be coming up after the bell that will probably help us determine whether or not this market and this rally that we've been seeing overall still has legs. I do want to also point out that after tomorrow, next week is a very bullish week historically as we wrap up April and head into May. Historically, the S&P 500 has an annualized return over 30% next week, which is more than triple the average returns on the S&P of 9% since 1950. So usually we have some bullish tailwinds that are helping equity markets, U.S. equity markets, as we go into next week. So keep that in mind. All right. As far as some of these earnings reports and the charts, I'm going to start with Facebook. That was a big one. And I was questioning Facebook yesterday. I know that was our poll, Aaron. We talked about, would you buy or sell Microsoft and Facebook going into their earnings reports yesterday? And I know not too many people said buy both, but that was the answer, at least for one day, because they both had really strong reactions to their earnings report. I'm going to pull up Facebook on the relative chart here because I was a little concerned about Facebook because it hadn't cleared its relative high. You see that relative high back in August? And then the one that we just had in February. Well, today's earnings report was the catalyst to get this relative breakout. I think that's very significant for Facebook. And will we go back and fill that gap? Potentially. Let's see how this candle develops today. I think if we close on the high, then we have probably seen the low with today's intraday low. And my guess is we're going to make a run for that 220 area where we topped back in July. So Facebook did make an announcement that there's they I think recorded a charge of $3 billion for a fine related to all that privacy information being released, so forth. What I read was 3 to 5 billion, but I think they actually recorded a charge for 3 billion. I'm sure the market likes that just to get it out of the way. But when you look at the earnings per share, that 3 billion was excluded. So we take that out as a one-time charge. And Facebook came in $1.89 versus $1.66. So pretty strong earnings report there. And Microsoft, which I know Aaron liked Facebook. I preferred Microsoft. I guess technically, Aaron, you get the win because Facebook had a higher percentage gain today.
Yeah, well,
You'll take it. I know you'll take
I'll
it.
take it.
But I like both now going forward. I liked Microsoft heading into their report. They have considerably strengthened relative to their group today with their earnings, as has Facebook. And so I think they're both going to continue to be leaders as we go throughout the next quarter. So I believe pullbacks are viable. Now, you can see Microsoft was already pretty overbought heading into its earnings, and it's gapped up. If it does finish close to the low of the day, then I would suspect maybe in the short term we'll see Microsoft pull back. But I believe that rising 20-day moving average would be a great entry into the stock. Visa reported after the bell yesterday. They beat top line, beat bottom line, reaffirmed guidance, went down, hit their rising 20-day, bouncing back up. And you can see it is a very strong stock within its industry group. It is pulled back a little bit today and really maybe over the last week or so. But I think the overall uptrend still remains in play. And I think its industry group relative to the S&P 500 continues to be strong. So I like that one. PayPal reported last night. This is one I really liked going into earnings. Talked about this one with Danielle Shea yesterday. And I just think that the way this stock has been performing, it is clearly one of the leaders in the financial administration space. Watch this because we could be getting another relative breakout on the stock. And the group has been relatively strong when we compare it to the S&P 500. So those are all stocks I think that have been, performing pretty well. Let's take a look at a couple of others quickly. Tesla, they reported they had a much larger loss than expected. They are now down, challenging that key area of support near 250. Tesla, not been performing well. If you're a value investor, well, I don't even know if Tesla qualifies as a value investment given its losses. But if you're looking at price support on the chart, then Tesla might appeal to you. Xilinx, this one was probably the biggest surprise to me because usually when I see a stock that's like this, outperforming the number one scooter ranked large cap stock here at Stock Charts, and they missed on their earnings expectations. I'm shocked. I'll be honest. I'm shocked. How far it goes down, I don't know, but it is down 16% today. And gap support, a key gap support comes in the upper 90s. That'd be another 20% from here. We'll have to wait to see what happens there. One other stock I did want to just mention quickly, 3M. This is one that really hurt the Dow with its futures this morning. As soon as they came out and reported, the stock tanked. You can see it now down 10%. That's big for a Dow component. I would be careful with 3M. It did gap down below some key support. I think it's been going sideways for a while, and I wouldn't be surprised if it makes its move back down toward the recent lows. So this is a stock that's been underperforming its peers for the last several months, and this morning we found out why. On to upgrades and downgrades. What do you have, Aaron?
All right. Well, just as a side, both Tesla and Xilinx were downgraded today. So a little late, I would say, to the party were those particular downgrades.
Mm-hmm.
All right. Let's go ahead and start with some upgrades. American Express, Morgan Stanley has upgraded American Express from an equal weight to overweight. And they did raise their target. Their target was 123, and now they've moved it all the way up to 140. I have to say, I really like this chart. I mean, there's hardly anything to complain about. I mean, if you really had to find something to be, less than excited about, I'd just say that the bottoms on the OBV are pretty much flat in comparison to the very steeply rising price bottoms. So, but I'm looking at the volume patterns here, and I don't see anything that's too concerning. PMO buy signals in, right there. I really like American Express right now. I think that one looks really good. General Dynamics. This was upgraded today by JP Morgan from underweight to neutral. I picked this one to look at. Oh, their target. They went from 188. Their target is now $200. So right up here. Doesn't really match much with any overhead resistance or support, but that's what they picked. I thought this was a really good example in the very short term of a parabolic kind of move and the problems that can be associated with it. This was rather tame. But the idea is, you start increasing, the bottoms start rising very quickly on your price, and it starts to form this parabola. And the problem is that when stocks start to move almost vertical, this is a little bit less so, but when they start to move very, that vertical, steep rising bottoms lines, those are really hard to maintain. I mean, let's face it, it's hard for a stock to continue to move very quickly to the upside. It's great when you get involved in one of those. However, it broke down and it came back down to the last basing pattern over here. So that's why I picked that to show you an example of that. At this point, though, looking at the actual chart on the upgrade, I would have to say that, it looks pretty good. I would expect this support level to hold. However, I'm a bit concerned about this PMO that's starting to get overbought. However, again, you look at the recent ranges and you can see that even before things got a little bit dicey there in the winter of 2018, you could see that the lows typically were right around that 2.5 minus 3. So, a reading of 1.62, I don't think it's that overbought. You're seeing a nice improvement on the scooter. All right, Novartis was upgraded today. We saw Guggenheim upgraded from a neutral to a buy, and Liberum also upgraded from a hold to a buy. No targets here. And as you can see, really nice move that's already had started with the bounce off of that 200-day EMA a couple days ago. Now the PMO, it was starting to rise after that first bump to the upside. And of course, now it's really continuing to make that move. Volume, OBV is a little bit flat. Notice here that, the volume bars are starting to decrease even on this really nice move to the upside. Although this last bar, we're going to find out what happens today. It's only midday trading. All right, let us look at Canadian Natural Resources. We're now to the downgrades. Edward Jones downgraded C&Q from a buy to a hold. So they're looking at it in more of a neutral position. Kind of agree with that, although I would be a little bit more bearish given the PMO sell signal, at least in the shorter term. Again, OBV really flat, not really telling us a whole lot here. You're getting right here to that area, I would say, of support, though, right at $30. I didn't have a chance to put that in, but I think that's an important area. 50 about ready to cross the 200, so that would give you a buy signal. So this was downgraded, but they downgraded it to a neutral, and I have to say I agree with that move. Range Resources, RRC, Guggenheim downgraded it today from a buy to a neutral. This one I think is rather interesting in that, you're sitting on very important support down here at that $9 range. That seems to be the low. And, it's managed to come off of that. But looking at this, look at where we're at. So we're at the December low. We're at the bear market low, and price is now there as well. So it has not been performing with the market. So getting the downgrade, it makes sense. It's in the energy space, hasn't been doing that great. PMO sell signal. So I agree with the downgrade, although I might be in the sell category rather than the neutral category. Unilever was downgraded by DZ Bank from a buy to a hold. They haven't closed the gap yet. So I think you could still look at this as possibly an island reversal, especially when you see a PMO turning down below its signal line. However, OBV doesn't look too bad here. And the scooters, sort of mid-range. This could end up being an area of support, at that top in March. But on the downgrade, I would certainly avoid it. And I would start looking for that island reversal. That's all I have for upgrades, downgrades. Here is the list. I will have these in the Market Watchers recap so you can look at it more closely. All right, Tom, let's get started.
Yep, we're going to move into earnings point counterpoint. It's a new segment, and I think it's probably rather timely because we have so many companies coming out with earnings. It's really difficult to keep track of them in just the early technical headlines segment of the show. So I thought maybe we'd dedicate a little bit more time to some of these earnings that have come out and look, I don't know, a little. In some cases, look strong. Other cases look a little bit weak. But I'm going to let you start, Erin. Mm-hmm. And why don't you pull up Goldman Sachs, GS?
All righty.
They blew away their earnings estimates back on April 15th and really hasn't gotten a positive response. What's the problem here? Any thoughts?
Yeah, I have to agree. It's kind of we really didn't get the pop that you usually expect to see. We did get a little bit of a rise. I think that 200-day EMA has just been posing way too difficult overhead resistance for price. So I think despite what happened with earnings, and then notice we got the, immediately after this pop, we immediately saw the PMO start to move down, declining tops on the PMO, rising tops on price. I think this one was technically, looking okay with, rising momentum, but certainly coming down since then. And that 200-day EMA, that just tells me that, we're still in a bear market configuration here.
Yeah, and I think, too, if you go back to that double bottom in October, when we broke below that in November, look at the volume come in, and that was at the 210 level. And notice where we just failed at $210. So I would even throw that in there. I think you got some price resistance, your 200-day. It's just flat the last few months where the overall market's been rising. So you got a relative laggard. I think Goldman Sachs needs to get through 210 before I have any interest in it whatsoever.
Yep. And there's your little relative chart. I shrunk it down, but not too much impressive here for Goldman.
Nope. And so next up, this is a small company. They came up short on their EPS and tumbled on April 15th. APHA. So after that earnings came out, they broke their uptrend. Just wondering, you see any hope here?
Oh, not really, because I would be looking at this. First of all, I would look at that as a breakaway gap. And then you follow that up with a continuation gap. And now when you put it all together, it looks like a reverse flag. PMO is now negative. Look at the OBV. It's declining along with price. I guess let's go ahead and annotate it. I think maybe we might have some support lining up here. I don't know. Yeah. You come up here where it did find that support. So you can see where it comes in at that gap and these bottoms all the way back here. This could be an area of pretty good support. I caveat it though. First of all, like I said, reverse flag, that's a bearish continuation pattern. Notice the EMAs. All of these had, sell signals because the 50 crossed below the 200 and then the 20 crossed below the 50. So it's on sell signals all the way across the board. So yeah, I don't know. There might be some hope, but honestly, I would probably cut my losses. At this point, I wouldn't be counting on that bounce.
Yeah, and I would also just say a year ago today, APHA was at $7.71, and it's currently trading at $7.71. So
exactly.
after all the ups and downs, the gap's up, the gap's down, trends up, trends down. We're exactly where we were 1 year ago. So not really seeing a whole lot on this one.
Nope.
All right, truckers have been incredibly weak, holding back the transports. And JBHT reported less than stellar results. $1.09 versus $1.25 anticipated. But the transports overall broke out on the strength of railroads. I'm just wondering about JBHT here within the trucking group. You think that March support will hold?
Well, let's look at this here. So there it is, and we're sitting right on it. I would be on the not optimistic side for a lot of reasons. First of all, of course, it's pretty obvious for me. It's a PMO sell signal below the zero line. I mean, that's really, really bearish. And then you've got the OBV has declined with this. So you can see, look at all the volume coming in too on that decline. That is not a stock you want to even consider at this point. I wouldn't even consider this as a bottom feeding opportunity. We're just not seeing anything that positive going on here. So I don't think there's a whole lot of hope. I would actually be looking for the breakdown and a test of the December low.
Yeah, I would tend to agree with you as well. And I'm just going to show something very quickly, looking at a relative chart on the truckers. So here on this chart, this is just a relative performance of the truckers versus the S&P 500. And you can see back at the end of December, well, middle of December, close to when the overall market bottomed, you could see a relative bottom on the truckers. And we went up. We were trending higher for about 2 months and then completely fell apart in March. We're starting to roll over again. We're not far from this double relative bottom. And if that breaks to the downside, I would be especially bearish the truckers. So I would tend to agree with you. I think that the odds are that JB Hunt does not hold this support level. We'll have to watch and see. All right, you can take it back. And Netflix. Of course, we love to talk about Netflix. We had that huge surge back in January. We recently beat earnings per share estimates. We tried to break out just a couple of days ago, and yet we've fallen back. So I guess my question here is, are we stuck on Netflix? What are we going to do here?
God, it's looking at what's been happening here over the past couple of months. I mean, it's mostly sideways. I mean, I would have expected a little bit more out of this particular stock. I mean, it had been a darling for so very long, and notice the scooter amongst the peers. It's starting to fail here as well. I do have a PMO buy signal though, but let's look at the support resistance right now. I mean, I hate to be, bearish Netflix. I mean, I think it's in that space, that internet space. But I mean, it's a FANG stock. There's always interest going on in there. So generally, I don't like to talk badly about this one because it tends to do pretty well. But seriously, over the last couple months, not so much. And now we hit that overhead resistance at about 381 or so, and it turned right back down. PMO is now turning down as it just got the buy signal. Right now I think it's just still going to be stuck in a consolidation zone unless we really see a nice pop in the market. But we did get that move, the breakout when we saw the all-time highs on the market. But it's still. It's not looking too good. I mean, I would still be looking at consolidation. It's in the middle of that trading zone. I don't know. What do you think?
Yeah, I think your resistance line you drew there is the most important line on that chart. I mean, after gapping down several months ago, was it back in August or whatever last year, July, we have not been able to get through 385. That has just been a wall of resistance. We've seen it multiple times now. And so it's kind of like Goldman Sachs to me. Not that it's been as bad a performer as Goldman Sachs, but I just want to see it get through that level. I need to see buyers come in when the stock's trading at 385 instead of always seeing the sellers showing up there. So that would be number one. Number two, and this is more of a fundamental discussion point, but Disney just came out with their $6.99 service, Disney Plus.
Yes.
When Netflix reported, they said, oh, that's not really going to impact us. And then the next breath, they lowered their guidance. So right. I'm not quite sure I completely agree with that. I think Disney's a formidable competitor. And so I think that is having an impact on Netflix. And I think that's what's holding the stock back. So I'd like to see that tactical breakout before I would be overly optimistic there.
Exactly. And I mean, think about it. The market's making new all-time highs, and where's Netflix? Not even at all close to challenging, you know.
Yep. And you see some of the other stocks like Facebook bouncing back. Of course, Microsoft's been great. We got Amazon and Google on deck to report soon. We'll see what happens there. Apple's been moving. Netflix, ever since that January move, not doing a whole lot. But anyway, we move on. This one, I actually liked the earnings report, and the stock made a nice gap up. What do you think of Progressive Corp, PGR?
PGR. It's actually been on my radar because it's been moving sideways. And then in an intermediate term look, I'm just going to show you the weekly really quick. That looks like a really great flag formation. I mean, pretty textbook. If you look here, you could have seen a descending triangle. That's a bearish pattern. It managed to just blow that away. I think on an intermediate term basis, it's really tasty looking. Right now, I don't think it's that bad. I mean, you got the PMO buy signal. You've got it sitting right here on, let's go ahead again, and I want to annotate that. You've got it sitting right on pretty strong support here. It was really struggling with this area at 74, managed to gap up through it. The only caveat I might say, and just looking at it here is you've got that declining tops, kind of flat bottoms, could make a case for maybe a descending triangle. I would also maybe consider a possible island reversal here when you look in the thumbnail. But overall, I mean, I think it looks pretty good. Looks like support will hold here. And I'd be looking for it to turn back up once it tests 74.
All right. We're going to move on to some railroads because this has been a really strong part of the market. Two of the big railroads that have already reported in the group. One was CSX, and I'm going to give you Norfolk Southern, NSC, but go ahead and take a look at CSX first.
Oh, yeah.
And you can look at NSC, and I'm just going to ask you if you have a favorite between these two.
Oh, okay. All right. Well, pretty similar chart here. Again, notice the difference here, though. We've got these highs, and CSX blew it away. It's continuing to make these all-time highs. I believe they're all-time highs. Let's go look. Yep. So they're continuing to do that. CSX looks very, very strong. And, I think that the PMO still looks good. I think you still have some room to move it a little bit higher. It can probably accommodate more upside if we're going to see that. 78, though, that's really the important spot, I would say, right now. Just given the fact that it kind of stalled here at that $80 range, but it seems to be holding above 78. Everything else looks pretty good here. I mean, I think OBV looks good. You've got a strong scooter. I'd expect that support to hold. And like I said, it's been outperforming for a while.
How
but
about
the other one?
NSC was the other one, Norfolk Southern.
Yes, let's look here. Ooh, this one looks even stronger, doesn't it? My caveat, of course, is always when I start seeing these very steep, almost parabolic moves to the upside, I get a little nervous. But interesting here, because you came up, you had that, what looks like, I suppose, if I went to a candlestick, probably a shooting star after that gap. That was pretty much an alert flag saying, hey, probably an island reversal here. And sure enough, you got all of that volume in there, though, and we're not seeing too much so far on that decline. So I think it's just a natural pullback right now. And, the PMO doesn't seem too concerned about it at this point. It is getting a little on the overbought side. But I would say of the two, I think if I were to go today and go invest, I'd actually do, I would go with CSX just because of where it's sitting on that support level. I think there might be a little more upside potential. But they both, I think, look pretty good. Do you have a favorite?
I do. Funny you should ask. I'm going to go ahead first and just, I mentioned that railroads were the strongest area of transports. Take a look at this chart. This is the railroad index divided by the transportation average, just going back the last year. I don't think there's any doubt that railroads are leading transports and just breaking out again to another relative high. So not only are they leading, but they're showing no signs whatsoever, in my opinion, of beginning to decelerate in terms of their outperformance. So I really like railroads. I think this is still a very strong part of the market and a group that I would be keeping in mind. Now, as far as the individual stocks, I'm going to go with Norfolk Southern. I do agree. That is a shooting star. I think in the short term that could be problematic, and it is so far today. If we were to get back to the 20-day moving average, I would be very interested in NSC and probably would own it at that point if it were to get back that far. The reason I like NSC better is when you come down and look at it on a relative basis, it went sideways with the railroad group. So in other words, it was going along with the ride, no big deal. Recently, though, here over the last 5 weeks or so, heading into its earnings report, we saw that breakout. Money started rotating more toward NSC, and then we got the big strong earnings, and you can see we've been moving up here quite nicely over the past month or so. Also, check out the volume trends since early February. Big volume every time we get a push to the upside. 3 in a row. I think there's a lot of accumulation taking place here. When I look at CSX, I still like it. I agree with it. I think both these stocks look really good. We did get the breakout on CSX. Saw nice volume on the earnings, but I think when you look back over the last 3 months, there's not quite the same signal of accumulation. And when I look at the relative strength, CSX versus the railroads, you can see it's not anywhere near its relative highs that it saw in 2018. So I like both of them, but if I had to pick one, I think I like NSC better based on its strength.
I like your argument, actually. I think you may have convinced me.
All right, Erin's going with it. First time, Market Watchers Live first. I think I just convinced Erin.
Tom changed my mind.
Yep. All right, take it back. How about ERIC? I remember talking about this one. This is Ericsson, but ERIC. I talked about this one before the earnings because they were outperforming a very strong telecommunications equipment group. And they came out, they beat their earnings estimates, and they're in a solid industry. They've been pulling back a little bit here recently, just over the last week or so. So my question is, do you like it on this pullback?
All right. Well, there's your relative chart as you were talking about it, but I'm going to go back to mine. All right. So, look at, there we go. There's what we were looking at on some of those other charts. The possible island certainly got that on that reversal. I don't like the PMO topping, but let's face it. I mean, you get a big move of 2.5% down. The momentum is obviously shifting to the downside. And we didn't even really get into, that overbought territory. I mean, we never really got very high on that. It's on that 20-day EMA. The PMO, though it is turned down, like I said, it's a natural occurrence given the big gap down. We had that reversal. I think, we're sitting on that 20-day EMA. I would give this one a shot to continue into it. If I were holding it, I would be very upset today, but I think I would probably hang on to it, watch the 20-day EMA, and keep an eye on the PMO. But overall, look at this. It's in a nice rising trend since the December low, and it really didn't test any serious lows when it did hit the December low. So it looks pretty strong.
Yeah, actually, full disclosure, I bought this one today. I like the pullback. First of all, I love the volume coming in. Look at that volume, over 25 million shares. And you look back, that was the strongest volume day that we've seen all year. It's in a very strong group. And with that gap up, clearing prior highs, I've been waiting for a pullback. I didn't know if I'd get it at the 20-day, but I figured the combination of the 20-day and gap support, which I believe is 968, I think that's the key area for Ericsson on a pullback. It was just trading at almost 1050 a week ago when it came out with earnings. So I think getting it back down at this level at least improves the reward to risk quite a bit.
Yeah, absolutely.
All right, we're going to go into Chipotle, CMG. This was one of the strongest stocks in the market heading into its earnings yesterday after the bell. The stock was getting clobbered earlier today. They beat on their top line. They beat on their bottom line. They raised their comps for fiscal year 19, but the stock went from under 400 in late December to 7.25 recently. And I think it was priced for perfection. I think what traders are saying is that, okay, it was a good report, but maybe it was already all bought out and needed this pullback. What do you think here?
Yeah, I think it definitely needed the pullback. But what I think is really interesting is if you were holding CMG, we had ample warning that there might be some problems. Ample warning with that PMO sell signal. So, I think just seeing that, even going into earnings, I would probably have been suspect or concerned about a pullback. I think it needed it. But I don't think it's necessarily done, given the momentum to the downside right now. But at the same time, you get these earnings moves and a day or two, then it snaps back to where it was. But I suspect we're going to have to come down here and test even lower around that 625 area where we had that top back here in March, just because I really don't like the way the PMO is. I think there's promise, because look at what happened on that nice volume bar. I mean, we ended up with a higher high on the OBV.
Yeah. Well, I do like Chipotle. I think that this is an opportunity. Stock did beat, or company did beat top and bottom line. Like I said, raised their comp guidance for fiscal 19. So I think all the fundamentals are still there. I think this stock just simply ran too far. I mean, going from 380 to 720 in 3 months.
I wish I'd been holding it.
Yeah, I did own it for a while, and actually I took profits. It's kind of funny. I think I took profits at about 620 and then watched it for the next 3 or 4 weeks go up to 720. But you never lose money taking profits. That's what I always try to tell myself.
Oh, absolutely. Exactly. It's better not to look back on profit taking.
And sometimes there are stocks that pull back after you get out, and you don't pay.
And then you pat yourself on the back because you're so smart.
Well, usually I don't pay attention to those. I only pay attention to the ones that I could have made a lot more money holding.
Right.
Anyway, all right. We got 4 companies. We'll see if we can get through a couple of these, at least maybe all of them. But there are a couple of big companies that are going to be reporting over the next. Amazon's going to be our first one. That one reports tonight after the bell. And we got some other big companies we'll take a look at. But what do you think of Amazon heading into its earnings tonight?
All right.
Think we'll see good numbers?
I'm sure we will. I mean, this is such a strong company. The question is what happened before with Chipotle, but we don't have that problem. It hasn't come up here to test those all-time highs it had back in September and October. So I would suspect we're going to at least come up here and start testing those all-time highs. Look at the PMO came down, did what I like to call a bull kiss, sort of a fake out move, maybe to try and get some people out after this decline right here. But now it's rising, and the -4 was the bottom of the range, so it could still move higher. I think the PMO could still move higher. I suspect we're going to see a nice pop because we have room to move higher here because we didn't get up to those highs back in September and October.
Yeah, I think I agree with you. I think this one's going to pop. I'm going to show you my relative chart here. Number one, you can see that on an absolute basis, the broadline retailers have been moving up really nicely. Amazon, relative to the broadline retailers, had multiple tops going back to the end of last year and early this year around that 0.955 level. We took that out at the end of March, and we've been holding it, which I think is a good sign. We've also broken out to a multi-month high relative to the S&P, and the broadline retailers have just broken out to a multi-month high against the S&P. So I think we're going to get a big surprise here on Amazon tonight, and I wouldn't be surprised if we gap up 100 points or more today.
Mm-hmm. Yeah, it's definitely a tempting purchase.
Yeah, I don't do that heading into earnings, and believe me, that is an educated guess. If you want to buy a stock into earnings, feel free. But I think we've shown you enough stocks recently that go both ways. I don't like to take that kind of risk.
All right.
All right. What do you think of Google?
All right.
And grab that screen too.
Yeah. Oh, yeah. Thank you. Okay. All right. Here we go. Alphabet. All right, this one's looking really good. You've got the PMO buy signal. It's still heading up. -3 looks to be the bottom of the range, so +3 is probably the top of the range, as you can see here. So we might be starting to get a little bit overbought, but it's time now. It's going to start challenging that all-time high back in July. It already surpassed these tops both. That we had seen in September and October. This area, though, right now, 1275 around these tops is clearly a problem right now. For 3 days, it hasn't been able to get above that, but Again, it's another really strong company. OBV looks great. Scooter, it's starting to improve amongst its peers. Obviously, the EMAs are exactly the way you want to see them. I suspect we're going to at least test that all-time high and probably get above it. I think Google looks pretty good right now.
Yeah, this one I'm kind of on the fence. I mean, I love the group. Internet stocks really starting to strengthen again, which I think is good news for Google. We do have that overhead resistance, and if we can gap up above it, if we can get through that July high, I agree. I think this is one that certainly could run. If we don't with earnings, I'm not sure what the catalyst is going to be short term to get us through that July high. So I'm kind of a little bit mixed here on Google, but given the overall market environment being so bullish, I'd probably have to side with the bulls on this one.
That's a very good point.
All right. How about McDonald's? MCD, restaurants and bars, have been pretty strong. McDonald's has broken out recently. Ooh. What do you think? They report coming up next week, I think.
Wow, that's a really nice chart. It's been on that buy signals all the way since mid-February. Got the breakout in March here, and then now we're moving nicely upward. The only issue I might have, if you want to worry about something, would be the increase in the steepness, sort of parabolic like on this move to the upside. But gosh, overall, I mean, look at this. It just looks strong. And I'm going to look at a weekly just because I want to see how that's looking. And see, we came down, we got the buy signal here mid-March. So not only did we get that February signal on the daily, I think that was the February buy signal. It didn't take that much longer to get the buy signal on the weekly chart. I think this one looks good. And actually, on the weekly, you could make a case for, well, no, it's not really a double bottom. That's a reversal pattern. But you could see the double top, and it never executed. It came out of that, and that's a bullish conclusion to a bearish pattern. I like that.
Yep, I would agree. I think you got a great looking chart longer term. I think in the near term, getting that breakout. And I would even say, maybe a little bit of an ascending triangle with that double top from November and January, and then the rising bottoms from December and February.
I agree.
Nice ascending triangle off of that uptrend. And we got that breakout. So I'd be looking for there. What is that? Maybe 20 points above.
Yeah, well, let's see. If we did a measurement on a triangle here, that would give us 167.5 to about 187.5. So like a $10 minimum upside target from that 190. So we're almost there, but that's a minimum target. I think it could still run higher.
Well, that would be a $20.
Oh, yes, $20. So yeah, it's certainly got room.
Yeah, I look for it maybe to 210. That would be kind of a target, I think, in the near term.
Yeah.
All right, we're going to do one more. And this is in the healthcare space. Of course, healthcare has gotten hit pretty hard recently. But one of the stocks that has been a pretty good performer in the pharma area has been Merck, MRK. Now, this one got hit in April because of the overall market. But what do you see here? I'm just curious.
Yeah, I'm seeing a lot of these sort of hooks, I guess, where you get that test really steep drop, but now we're starting to see some improvement. This one's really interesting because I do see the PMO starting to get more healthy. I'm not thrilled with the OBV right now, but looking at these volume bars coming in on that rally, I mean, that's still pretty strong volume. I don't like to see it starting to move lower when you're starting to move higher. But again, this is an intraday bar, I believe, so we still could have some more coming in as far as volume. But you're getting the PMO bottom. I got to look at this with I need the annotation tool. I got to see where your overhead resistance is. That would be right there. I suspect we will get that move up to that $79 range. Whether we can hold on to that, I don't know. I would be interested to see where the 20 and 50 are as we make our way up there, because that could also pose some problems with overhead resistance. And I would also like to see the PMO actually turn up here. But, if you wanted a quick little, rise there, $76, $79, I don't think that'd be too bad. And if it does get the breakout, you've got to move to $84.
Yeah, I'll go ahead and show my relative chart on this one, and then we'll wrap this segment up. But when I look at Merck, first of all, we were at 84 back to start April. And when you look on a relative basis, Merck was one of the strongest, if not the strongest pharma out there. And I think this is more of a case of the baby being thrown out with the bathwater. I think there was a lot of selling taking place in healthcare. And as a result, Merck just got taken down with everything else. But I think it held its prior lows and it started to turn back up again. This is one that I actually give a pretty good chance to reverse and break back up to that and get back up to that 84 level in April and even beyond. Because I do see with the pharma starting to turn back up again, and Merck relative to the pharma starting to turn back up again. If I was going to take a shot in the pharma space, this would certainly be one of the stocks that I would give a lot of consideration to. I think that this one's been beaten down, maybe even unfairly, but they do have earnings coming up next week, and I think that will probably tell the tale on Merck.
All righty.
All right, well, let's go ahead. There is our summary, and I thought this was a fun little segment talking about some of the companies that have recently reported or will be reporting soon. You got Erin's take on it, my take on it, and we'll see what happens to some of these, especially Amazon, which reports after the bell tonight. I think that one's going to be, well, of course, it's going to be widely followed, but I think that one could be a big surprise to the upside.
Oh yeah, I do too. I would be looking for the pop. Tomorrow we'll see if we have to eat humble pie or not.
I'm used to it. It actually is starting to taste pretty good.
All right. I am getting that 10 and 10 ready right now. So I don't have the RRG, obviously, since we've been discussing things. But I know that our first symbol is going to be GBTC.
All right. Let me go ahead and pull that one up. And we will take a look at it. Okay. Well, first, this has been downtrending for a while. I'm going to go back a little ways here, and then I'll annotate. I'm going to go back a couple of years because literally we had the parabolic move on GBTC, and then we were in this long-term downtrend. I see volume coming back in, and I see a couple things here. Now, I'm going to go back to a shorter-term chart so we can annotate this, but I just wanted you to see the downtrend. I think you could draw a line right along these tops. I think we sideways consolidated, and I think we now have a breakaway gap back to the upside. So I would be treating this as though it is beginning to uptrend again. So if I shorten it, we'll go back to, probably can just do actually I want to do 6 months. All right, so if we just look at the last 6 months, here was that sideways consolidation. Here's the breakaway gap, and we've got equal highs. So far, rising lows. I'd look for the 20-day moving average to provide some nice support. Great volume trends. So what I would be looking at here is one of two things. Either an uptrend where we have equal highs. So we got an uptrend, equal highs, followed by potentially higher lows. So let's go ahead and draw this in here. Now, I don't know where this downtrend is going to end, but maybe it comes down to the 20-day moving average. I think that could be a really interesting area for support and entry. So I'm going to just put a little arrow in there. I think that could set up really nicely for possible ascending triangle. Also testing the rising 20-day when you have that PPO up above the center line. Many times you will get that 20-day test, which can be bought. So overall, I kind of like this pattern. Now, if it fails at the 20-day and starts to move lower, then I think we could go back down and test the breakout level. I mean, I could see us possibly going down to 550. So if it doesn't hold that 20-day, which currently is at 636, that would be my short-term line in the sand. This is incredibly volatile, and I would not be shocked to see a move back down to 550. That level, though, off of this kind of volume moving up, I think 550 would be great support if we were to get down there. So those are the two key areas that I see here to the downside. I think to the upside, it's pretty obvious. We need to close above 750, and I think that would likely lead to some additional technical buying coming in.
All right. And the most popular in the chat room, well, actually, it was a question, but you answered it already. Xilinx is down big time after the report. Are you shocked?
Yeah, I am shocked.
Yeah.
Yeah, I'm very shocked because, again, I follow what the market's telling me on these charts. And when I see a stock that was trading at 90 back in January, comes out with a strong report and keeps going higher to 140, I'm not shocked that it's down. I think anytime you go into earnings, it literally is a crapshoot to me. I think you can have buy on rumor, sell on the news. So you could have great news and still go down. We've seen that. I mean, I think Chipotle is a perfect example of that. I didn't see anything wrong with that report. Stock was getting crushed earlier, trying to bounce back. This is different, though, because in my opinion, the market expected a beat. I think the market was anticipating that Wall Street estimates were going to be exceeded, and Xilinx came up short on earnings. They did beat on the revenues, but it was only by like $1 million, maybe $1.5 million. I mean, it wasn't much, and the earnings fell short. And so I think that we've got some problems here now. Where does it go? I wouldn't touch this stock now. Now that it's missed its earnings expectations again, I kind of watch the earnings and revenue expectations, because to me that's management's credibility. If they say that they're going to do something, I want to see them do it. And if they don't, I don't care what their excuse is. I don't like it when they can't meet up to what they told Wall Street to begin with. It's not like Wall Street's just making these numbers up. They're coming up with estimates based on what management's telling them. So I think we got a couple of issues here. I think number one, we've got to hold on to this March support right there that I just drew. But I would not be shocked to see Xilinx make a run back for the upper 90s. We had a huge run, big miss, well, 2-cent miss, but still a disappointing report. And if we don't hold this level right here, I think in time we could see Xilinx back down to about 97, 98.
Yeah, that'll be interesting. I think the magnitude was a shock to me, but yeah, I mean, it is a crapshoot. We see it go both ways, but yeah, the magnitude to the downside was kind of surprising to me.
Yeah, well, you don't expect a company that's been reporting, or that not reporting, but a company that's been trading so strongly. It was the stock chart's technical rank, number one stock among all large cap stocks. You don't expect them to miss their earnings expectations, and I think that's what's got a lot of folks panicking out of the stock. Look at the volume. This is not light volume. This is going to be the heaviest volume of the certainly last 6 months. So
yeah, absolutely. Yep. All right. The other one that was tied for first was T. Rowe Price, TROW.
Okay. Yeah, I like T. Rowe Price. I'm going to pull this one up on a relative chart. And the reason I like it is its relative strength to the asset managers. It just actually went to a 52-week high relative to the group. Now, when you look at the chart and you say, well, yeah, but it's not near, June, July highs. Well, it's because the group is completely out of favor. This is one of the better looking stocks within a beaten down group. We saw what happened with Lockheed Martin, by the way. Defense stocks were not doing well. Lockheed Martin had been a relative outperformer in the group, reported strong results, and took off to the upside. So I think T. Rowe Price is kind of in that realm of companies. I think that this is a company that is one of the better, if not the best, performing stock within the asset manager group, and it is trending above its 20-day moving average. So I think the group's been weak, and that's something to consider. But I think as long as it continues to hold that rising 20-day moving average, where it just went down and tested earlier in April, just about tested it yesterday after the gap up came down and then went back up. That's what I would look for to the downside. And again, because the group is so weak, I don't want to lose technical support levels. And so I would keep a tight stop on this one at the 20-day.
All righty. Next one up, Visa. V.
All right. V. Well, they did report last night after the bell. And I think I did pull that one up earlier, but let's just take a look here on the relative chart. You can see, again, its peers breaking out to new highs. Visa overall, I think, has been a relative outperformer. Last week and a half, not so much heading into its earnings, but I think there's nothing wrong on this chart technically. And this is another one I think I would just go ahead and draw these 20-day tests. I mean, this is really where the stock has been bouncing. This is where the buyers have been coming in. So I would continue to look for support on that 20-day.
All righty, excellent. Let's see, next one for our Canadian friends. Peyto Exploration, so PEY.TO, and they're asking buy, hold, or sell.
PY?
Oh, PEY, I'm sorry.
Okay, PEY. Buy, hold, or sell. I'm going to go with one of those three.
Mm-hmm.
Yeah,
I hope so.
I'm not a fan. If I've been holding this one for a while, I'm a momentum trader, so I'm not going to be in a stock that has a downtrend followed by sideways consolidation. because normally you're going to see confirmation to the downside. Not always. When you bottom, a lot of times you'll do this before you come back up and make a breakout. If I was holding it right now, I think I would continue to hold because I'm so close to a major support level. But if I broke much below 645, I'd be out. And what I'm looking for here, the volume to pick up, watch for heavier volume, and a move back through $7.95, $8. That would be a very bullish development. In the meantime, I think we're just sideways consolidating. So, yeah, for me, I'd say it's more of a hold than anything.
Yeah, more neutral. Okay, let's see. Pixis.
Yeah, this is one that was absolutely on fire just a month and a half ago. You can see up near 32, but it had gone from 12 to 32 in 45 days. That is unsustainable to keep that kind of a movement to the upside. Notice the volume coming in on these moves back up, but I want to see it stay above this 20-day. I'm going to actually go a little bit further back on this one and see if this tells me anything else. Yeah, I mean, look what happened. This has got a history of going up and then right back down, up, now right back down. I'm a little nervous because even though the volume's picked up recently, the volume is nothing like what we saw during these moves to the upside. So I don't know. This was a strong stock for a while, but I think breaking back below that 20-day moving average, see that higher price, lower PPO, that's a negative divergence. I'll go ahead and annotate for those maybe who are not familiar with these. But anytime you get a higher price like this and a lower PPO, it's just telling you that your momentum is slowing. Price momentum is slowing. And what I look for is a 50-day test, a center line test on the PPO. We went below both of them. And so now I think this one's got a lot of work to do. I'd be skeptical. I'm going to pass.
All right, let's see. This one we've talked about quite a bit. It's been requested, I think, every day for the past week. Ciena Corp, CIEN. A couple of weeks ago, I think you and the audience picked it as a Monday setup.
Yep. Well, one thing not so good today is it's down 2%. The one thing that is good is that it appears as though we are forming the right side of a cup, and we went down and hit that 20-day moving average and bouncing off of it. So I would say that so far it is holding. I never, and I own this stock, by the way, so I never, and when you brought it up, I'm like, oh, what's it doing? Because I hadn't. But I think as long as it holds that rising 20-day, you can see the PPO has now worked its way back up above the center line. So we're starting to see more bullish momentum. And, you know, bullish momentum, bullish price action doesn't always result in a higher price every day. The question is when it pulls back, does it hold on to key technical levels? Do we see buyers jump in? So far today, we are seeing that. I think this recent low down here, just above 38 or near 38, I would like to see that hold. I don't want to see the stock go all the way back down here to 36 and change. So I'm watching the 20-day moving average. I'd like to see it bounce off of that.
All righty. Next up, CNC, Centene.
Yeah, this was one that I expected to do really poorly heading into earnings because I'm not going to pull up the relative chart, but it's in the healthcare provider space, and it was one of the worst performers. It came out with its earnings and actually bounced up. I think it's a dead cat bounce. I think the stock is actually going to roll back over. As far as maybe what to watch for on the chart, I would be looking at, I would look at the stock bearishly until we could get back through that 20-day moving average. I think all we did was go back up and test. See this gap down here at about 50 and then the recovery. Once we broke below 50, I think that becomes resistance, and you can see that is where we're struggling here. So I think the price resistance along with the 20-day moving average is going to put a lid on Centene. I would stay away from it.
Yeah, I don't like that chart really at all. I know my PMO is turning up on it, but I'm in agreement. It's kind of a fake out. I suspect a bull trap, as they say.
Yeah, why would a stock have a negative PMO in a market like this?
Exactly.
I mean, it's telling
I mean, look at what it's done since December when everybody had their low. It actually is now traveling exactly opposite. So certainly not outperforming. How about Lazy Boy, LZB?
Yeah, this one was on my strong earnings chart list, came back to gap support just below, hit that 50-day, and we're getting close to it again. I'm okay with this one as long as it holds that price support level, because I think you are in a trading range, and that's the trading range I would follow. I mean, the gap support that I would have liked to have seen hold would have been right about there at 32. We went just below it and then printed a reversing piercing candle and then started to reverse back up. Now we're coming back down, fairly light volume. I think as long as you hold about 31.50, if you break and close below 31.50, I wouldn't take any further chance. But I'm expecting it to turn back to the upside.
All righty. Let's see. The very last one is going to be Lam Research.
Okay, Lam Research just reported earnings yesterday. We got a beautiful gap up. It's continuing to move to the upside. So unlike Xilinx, which is also in that semiconductor space, we actually had a nice report out of Lam Research. I think they came in at $3.70, and the market was expecting like $3.38. So really nice beat. I think they also topped revenue expectations, getting a nice reaction. So this is one I'd have on my strong earnings chart list and be watching for a pullback. Now it did gap up. Let's see how we finish. If we were to break back down and close somewhere closer to the low and have like a shooting star candle, then maybe we would pull back and look for a gap support test, which would be real close to that 20-day moving average. And you can see the 20-day provided great support back in March. So that would be on my wish list, getting a stock with a strong earnings report, breaking out, and then maybe pulling back near term to fill a gap and test the 20-day moving average. I think there you could have a very, very solid reward to risk trade here on Lam. But I like the stock. I believe eventually this one is going higher. So this is one that I would certainly endorse on my strong earnings chart list and continue to watch.
All righty. That was the last one. Here are the symbols that we just went over. They will be up in the Market Watchers Live chart list. Just go to the Articles tab, click on Market Watchers Live blog, and right there at the top, that's going to be where your link is.
All right. A couple of weeks ago, we started a new segment called Talking Technically. And I actually was recorded and talked a little bit about gaps. And I just mentioned Lam Research. So listen in for the next couple minutes and hopefully pick up a few pointers on gap trading. Gaps can occur for a number of reasons. When we look at this BPOP chart, Popular Inc., you can see a really big gap up back in the middle part of February. Now, what I usually look for are gaps to fill. And what I mean by that is after you see a gap higher, a gap fill occurs when you move all the way back down eventually to test that prior close from where the gap occurred. So again, back here in mid-February, you can see the gap up. Looks like BPOP gapped up to about $46 from that prior low, or from that prior close of about 40. It took, in this case, about 7 or 8 trading days, but eventually we worked our way all the way back down to fill that gap at that $40 area. A second example was in July. And actually, if you notice, there are 2 gaps. One gap up from about $47, where we open at about 48 and continue trading higher. The next day we gap up to almost 51 and pull back. The gap fills, however, you can see were quite different. The second gap up was filled the very next day. After gapping up from about $50 or so up to about the 51 area, we moved back down and were able to fill that gap in literally about 24 hours. The earlier gap, however, back in on July 24th or July 23rd, you can see that the gap fill going back and actually getting to that prior close didn't occur for about 2.5 to 3 months. So these gap ups can fill quickly. You can see it the same day of the gap up, or it can take sometimes as many as 2-3 months on a chart, sometimes even longer.
All right, it is time for our final market update. Let's see what's going on in the markets. Well, you know, the S&P 500 was spending most of its time today in negative territory, but we are seeing it actually moving up. It's up a little under 2 points. And you can see as far as the Dow, big gap down, it's still trying to make its way back up, but it's taken back just a little over half the losses, but it still has a ways to go to get back into positive territory. Dow is down just under 110 points. NASDAQ is in positive territory, traveling sideways right now. Mid caps and small caps both hit very hard in the morning, like we saw with industrials, but they are making their way back, cutting some of those losses. Russell 2000's taken back about half of them. S&P 400 still needs to do some work. We've got the TSX, and it is really sitting mostly unchanged now. It is down 9 points. It also started with most of the major markets down, and hasn't been able to get back into positive territory just yet. TNX Treasury yields are higher on the day, 2.536%. VIX got very high today, considering we were up over 1425 for the VIX, but we have now moved down. We're actually having readings lower than the close from yesterday at 13. UUP traveling mostly sideways, but staying in positive territory. I see a ascending triangle pretty much right here, textbook. So I would expect UUP to continue higher. Interestingly enough, we saw gold pop on the open. I suspect it was on the pop to the downside in the markets, typically a place that people consider a safe haven. However, as the market started to improve, gold started to not. It started to pull back. And the thing about this too, with this move, I do want to point out is, you usually see a reverse correlation between the two. So it's kind of unusual to see them both up at the same time. And gold, especially making that big move, but it has pulled back. Currently, GLD 120.68. USO mostly unchanged, traveling sideways since yesterday. TLT on the day slowly falling in a declining trend, currently down 40 cents at 123.17. And as far as our sector summary goes, comm services is the big winner right now. It is up 1.3%. The second place winner right now is up just over 0.5% with healthcare, certainly not having the day even that comm services, but still up, like I said, over 0.5%. Our laggard right now is the industrials. Not a surprise when you see how the Dow is currently performing. Industrial sector down 1.6%. That's all I have for the final market update. I'm going to pass it back to you, Tom.
All right. In my blog article today, I just wanted to point out there was a chart that I put in here on the dollar, and we're going to talk a little bit about the dollar in just a couple minutes. But here you can see, if you go back the last couple years, all the way back to May of 2017, we had not really been able to get above that 97.60 area. Yesterday, we closed at 97.86, which to me is very significant because we've had multiple tops up at this level over the course of the last 6 months or so, and finally we're able to clear it. Now, while the USD, the dollar index, doesn't update until the close, you can follow what's going on with the dollar by looking at the UUP, and you can see it is up again today. And on this move to the upside, the PPO is accelerating. The dollar is breaking out again. I think that it remains in a 7 to 8 year uptrend. And the fact that it is now moving to a 2-year high suggests to me that we're probably looking at going back up above 100 to test these highs from 2016, 2017. So anyhow, if you haven't already looked at the poll, today's poll, check that out, because we are going to talk a little bit about it, and then we will go over the poll at the end of the show. So we're going to move into our final segment, which is agree, disagree. And this is where Erin and I each state an argument, and we agree or disagree. So, Erin, I'm going to let you start with your statement.
Okay. Sounds good. Okay, so basically my thought is, and I'm going to get this screen from you, is, we are talking about being bullish on the dollar. And typically when we're bullish on the dollar, you usually see, the small caps start to perform. And so my question really is just going to be, would you buy the ETF for the S&P 600 IJR right now? And I am going to say that yes, I would. And I'm going to just show you a little bit about why I would. I actually did go into my account and purchase a little bit of IJR myself. So I definitely agree with this. What I wanted to point out is I have in Decision Point, we have all of these various straight shots in the straight shots chart pack. And one of the indexes that we cover is the S&P 600. And so for the S&P 600, you can look at the STOs, you can look at the stocks above 250 and 20-day EMAs, etc. I'm going to start, first of all, honestly, I'm going to start with the STOs. I think they don't look quite as good as the others. Let me see. I'm going to make this just a little bit bigger here. Alrighty. Okay. So I'm looking at these STOs right now, and they are in a declining trend, but they are about ready to pop above it. They're now, well, the STOB is above the zero line, so I'm liking that. And so I think the STOs are starting to really turn around and look positive right now. The other thing is obviously my PMO. Now it is moving downward right now, but again, you get a move over 0.85% to the downside. You can kind of expect that to happen. So I'm looking at the short-term indicators, and I like those. The intermediate term indicators I think look even better right now, because you did have, we do have a positive crossover here on the ITBM, and we're seeing the ITVM starting to turn up. I mean, the one thing you could maybe point out is the difference, the margin between the ITVM and its signal line versus the fact that ITBM is making that move to the upside. Typically, you really do want to see volume, the volume indicator, travel in conjunction with the breadth indicator, and we're not quite seeing that, but I still, I'm still liking the S&P 600. And let's look at some breadth. New highs, new lows. Look at the pop we got. We're looking at climactic readings right now on the S&P 600 as far as breadth, and that's really suggests to me a possible buying initiation. But let's just look at the daily chart here. And, you know, I like the daily chart here for, this is the small caps. I'm going to actually, let's go to IJR itself. And I think I had that one. Yeah. I will get to it right over here. It's in my market sector summary list. And here we go, IJR itself. Oh, let's do that right there. Okay. All righty. New long-term trend model buy signal. So we are now moving, IJR is now moving from a bear market configuration into a bull market configuration. So I think that looks really good. And again, the PMO, yes, it's ticked downward, but I suspect we're going to see 200-day EMA hold. Since I did end up purchasing it, one of the things I do is Dr. Elder uses a 2 ATR average true range Bollinger Band. And so I did the same thing to look at a possible area for a stop. I would put it here at about 77 or 76 for an intermediate term trade. And I would be looking for small caps start outperforming and doing a bit better. They still are in need of passing up their all-time high, though. And if you draw the declining tops trend line, we're just now starting to move above that. So I think things are looking pretty good for small caps. What do you think?
All right. I think they look just fine for small caps. I would agree with you. I think that if we just take a look at the IJR on a longer term chart, so I've got a 15-year weekly chart. So what I'm really looking at is the bull market that we've seen over the last 10 years, though. And when we look at the IJR, I think we're in a clear uptrend in a channel. And yeah, it was scary in December. When we look at the overall market, you know, the S&P 500, I can pull that up as well. And you're going to see the channel here also taking these lows into account. We went right down to the channel and turned back up, and now we're back up here setting all-time highs on a closing basis. So I suspect that even though the S&P has been outperforming the IJR or the S&P 600, I think it's just a matter of time. I think you see rotation between small caps and large caps, just like you see rotation between technology and consumer discretionary and so forth. So I think the fact that the dollar is strong, that especially if it continues to strengthen, that can be a problem for large cap companies that do business overseas, because their overseas profits actually get reduced by that conversion to US dollars. So, and small caps really are not impacted by that, because most small cap companies do business right here in the US. So I think that the IJR is going to outperform. in the second half of this year. Actually, from now through year end, I'll be really surprised if the IJR or small caps, Russell 2000, whatever you want to look at, I'd be surprised if they don't perform better than the S&P 500 between now and December 31st. I think the fact that there's a lot more room to the upside in this channel than there is on the S&P 500, I think that eventually you're going to see a lot of folks rotating back into this investment. So I like it. I mean, I completely agree with you, Aaron. I think IJR is a buy at this level, and I have no problems with it going forward.
Ooh, all right.
So we got 2 agrees.
Shocker, right? We both agree.
Yep. Now I'm going to see if you'll agree with me.
Okay.
All right. So I am going to take a look at the U.S. dollar. And I just showed you earlier in that market update how we were breaking out right here to a multi-year, almost 2-year high, but we still have some work to do to the upside. I haven't annotated this, but I want to really, this is important to annotate. First, I think if we pull up the trend line off of that 2011 low, we basically had a double bottom, double top, sideways consolidation in here. But I think from 2011 through currently, I think we have an uptrend in play. I think if you connect those lows, now we have multiple tests on that trend line. I'm not a big fan of connecting trend lines when you have 2 points, because you could literally connect trend lines anywhere, any 2 lows, any 2 highs. But I think when you start getting multiple, you have one here, you have another one here, you have a couple in here, a few more in here, I think that is a strong uptrend in the dollar. So I believe, and I've said all along, I think the dollar continues to go higher. I am looking for potentially a move back up to test the recent high a couple years ago, 103, 104, and maybe even beyond that. But we'll continue to watch. We'll see whether or not this trend line holds to the downside. But the most important thing in this chart is not so much what the dollar is doing, it's the impact that the dollar is having. And if you're not familiar with what the dollar can do, it can wreak havoc on your portfolio if you're not paying attention. So let me pull up I'm going to show you how it impacts the overall market. And it has multiple impacts, but I'm going to show you a couple that I think really make sense. Here, you can see, first of all, back from 2002 to 2007, 2008, we had a downtrending dollar. So in the last bull market, if you take a look, we had, this is energy relative to the S&P 500, and it goes shooting higher. Materials relative to the S&P 500 goes shooting higher. The CRB index, commodities relative to the S&P 500, goes higher. Gold relative to the S&P 500 goes higher. But now in a rising dollar environment that we've been in for the last 7 years, take a look at what happens. We have the exact opposite on all of these charts. We've got energy moving lower on a relative basis, materials moving lower on a relative basis, the CRB index moving lower on a relative basis, and gold moving lower on a relative basis. So my statement here is that the breakout in the US dollar is going to continue to pressure the XLE and the XLB. Doesn't mean they're not going to go higher on an absolute basis, but I believe they are going to continue to underperform, and therefore I'm going to stay away from them. Aaron, do you agree that these 2 areas, materials and energy, will underperform with the dollar rising?
All right. Well, okay, I'm going to take the screen. First, I'll look at the dollar just to see what's going on there on my chart. Let's go back over here. And, I agree. I'm certainly bullish here. I see everything looking good for the dollar. Like you said, we're getting some of those breakouts on multi-year highs. We're getting ready to test that 2016 top, which looks good. Notice that the PMO is now starting its move up on a buy signal. So yes, I think the dollar looks pretty good. Now, as far as how it's going to affect what's going on with XLE and XLB, I added the correlation just to see, and I'm going to show people how to do that, between UUP and XLB, and the correlation with XLE. All righty. Now, this is different than relative performance, which is what Tom just showed you. This is just telling you, as far as price goes, how often do they travel in a reverse fashion? And you can see typically they do. They typically, if the dollar goes up, you should expect materials and energy to probably be lower. And I think we're doing the same thing. Right now, though, there's really no correlation. So I think that XLB and XLE on their own could do kind of what they want to do. But knowing this is the case, and I am very bullish on the dollar, I have to agree with you. And if I look really quickly, I'll look really quickly at the XLE and XLB. And you're in a nice rising trend right now. Flat PMO because the acceleration is just continuing to the upside. I think that we're still going to see some upside on XLB and XLE. I agree with you, I guess, that there's going to be pressure on them both because of the dollar. So I agree with you on that. But I still think both of them could still enjoy a continuation of their rising trend. Here's XLE, and XLB is right here. And there you go. It's getting ready. In fact, materials is getting ready to test some really important support. But given what's going on with the dollar, and then yes, notice PMO sell signal.
Yep. Yeah, and I agree with you too that I believe both of those groups will go higher. I think that's the hallmark really of a bull market where you get wide participation. But I do think that rising dollar is going, I mean, if you're looking to outperform the S&P 500, I think the dollar rising is going to make that much more difficult in the energy and material space.
Absolutely. Totally agree. Isn't that great? Today we agreed a lot. I think people are probably going to be surprised.
I'm shocked. I'm going to let my therapist know when I get in.
Me too. Does that mean I'm wrong now?
No, that doesn't mean you. Well, probably one of us
has to be.
Means we're both wrong because we have the same answers.
Yes, exactly.
All right. Well, there's our summary, and I'm interested to see what the audience has to say about the dollar, and they're agreeing with us. Okay, so the dollar, the audience believes the dollar will continue to rise and pressure the relative performance of energy and materials. And if that's the case, then you want to be, I mean, if you're an ETF trader, I think what that tells me is that you want to be lightweight, the XLE and the XLB, and you want to be overweighted some of the other sectors, maybe some of the more aggressive sectors.
Sure. We just showed you IJR ETF, and both of us think that looks pretty good too.
Yeah, I mean, over time, I look for small caps, and actually since 1987, I think small caps have averaged going up 11% per year, which is better than the S&P 500. So, yeah, if you think you're in a bull market, if you think the stock market's going higher, and especially if you think the dollar's going higher with it, I would suspect that we will see outperformance in time from small caps, even though that has not been the case the last couple of months. All right. Oh, wow. It's getting close to the end of the day again. And,
I hope you enjoy your time with Greg on Monday.
Oh, yeah, we will. We always do. You think you and I disagree a lot. Wait until Greg gets on the show. We have battles.
He is a gold bug.
Well, if he's bullish gold right now, we're definitely going to have some battles because I am not bullish gold.
Well, you battle about that one anyway all the time. But have a great show tomorrow. DP is tomorrow afternoon, so I won't be in.
Sounds good. Enjoy your weekend. I'll see you back here on Tuesday, I guess it is. Just want to mention the Dow is currently down 100, NASDAQ up 22 as we wrap up today. Thanks to all of you for being with us today. Please remember to complete the survey as you exit. It is located below the video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody, and we will see you back here tomorrow. Happy trading.